I just made over 3 times my profit using support and resistance, and it was really simple. I will show you how to accurately draw support and resistance levels, when to enter the market at the perfect time, and the secret strategy that I use that helped me take winning trades. We all know support and resistance are the foundation of trading. It's one of the most popular subjects talked amongst traders, but sometimes it can be difficult to accurately draw support and resistance. Has this ever happened to you? It's the beginning of a new trading day and you start to draw out key levels that you believe are support and resistance. Line after line, you continue to add more and more areas where the price rejects, until your graph looks like this. Don't worry, we've all been in this situation before, including myself. To be fair, most of the lines are at support and resistance, but some are considered to be far more stronger than others. First, what I found useful when drawing support and resistance is to start at a higher time frame than what I would usually trade on. For example, if you are day trading on the 1 minute or 5 minute time frames, you should look at the 1 hour or 2 hour time frames to draw out your key levels. There are many reasons why this is important. One being, the levels on the higher time frame are more stable and respected by the price, meaning the chances of a false breakout are low. Another reason being that the majority of traders are watching these key levels on the higher time frame, making these areas easier for a clear entry point, compared to on a lower time frame, where price seems unpredictable most of the time. Once you have found strong support and resistance levels, make sure you continue to move where these key levels are throughout the week. Keep note of where price is rejecting these areas and where price continues past it. Sometimes price will break past your support and resistance, but this does not mean it will continue upward, which at first might look like a breakout, but in fact, it's rejecting the general zone of the area. You should not rely on exactly where the levels are located, because price might chop around a bit before making a bigger move. This is why making support and resistance levels with zones might be more helpful than using lines, since it will help you find the general area where the price might reject. One of the most important ideas when trading with support and resistance levels is to wait for confirmation. What I see a lot of traders do is after they find a key level on a higher time frame, they wait until price reaches close to the resistance and enter the trade with their stop loss above the resistance, hoping it will reverse at that level, but instead it breaks past through and hits their stop loss. The idea is right, but entering a trade with no confirmation of it reversing is very risky. The safer and more effective method would be to wait until after the price is rejected at the resistance level. We can see a clear trend line heading upwards and a key position where price has to retrace and break. This would be a confirmation that you can use to enter the trade short, since it shows multiple signs of weakness trying to reverse off of the resistance level. Right here is where you should enter the trade. You should always wait for confirmations just like this one when entering trades with support and resistance, which will really increase your win rate percentage over time. The next tip to increase your odds of winning a trade is to use what I call the critical confluence method. This is when you combine support and resistance zones with something like candlestick and momentum patterns. Let me show you a live example of a successful trade using this strategy. Here we have an uptrend approaching a previous resistance level that we found on a higher time frame. After zooming in to the lower time frame and drawing a trend line and a key breaking point, we look at the candlesticks that are forming. As you can see, the candlesticks are showing a large amount of rejection with multiple bearish candlesticks. This means that the trend has a lower potential to continue upwards and a higher potential to reverse in the opposite direction. We would then enter the trade after all 3 signs of our confluence have been confirmed, with our stop loss above the resistance and taking profit home as the trend continues to reverse. Having multiple signals to rely on is the most important part of this strategy. Never trade off of only support and resistance levels. The key is to combine multiple indicators in order for the odds to be in your favor. This is one of my favorite strategies that I still use to this day, and if you found some valuable information in this video, let me know in the comments down below. Thanks for watching, and I'll see you in the next one.